RIBO exam preparation. Core concepts, regulations, and insurance principles. RIBO regulations and licensing. Part 1. Broker under supervision. You are prohibited from acting as a sole proprietor or serving as a principal broker. Definition of a broker: a registered general insurance intermediary who deals directly with the public and receives compensation, commission, or fees. Finder's fees. Brokers are strictly prohibited from paying a finder's fee or referral split to any person who is not licensed or registered as a general insurance intermediary. RIBO Bylaw Number 20, Information Changes. Any change to your professional information, such as a change in employer, brokerage, legal name, or mailing address, must be filed with RIBO within 30 days of the change. Code of Conduct mandates that a broker must be competent, honest, maintain absolute integrity, be candid when performing duties, and fully disclose all fees prior to rendering services. Policy Delivery Timeline. Once insurance coverage is bound and evidenced, the actual policy or certificate of coverage must be delivered to the client within 21 days. Unlicensed staff. Unlicensed brokerage employees are permitted to generate and send invoices to clients, as this is an administrative task that does not require a license. Premium discounts. Brokers and agents are strictly forbidden from giving unauthorized discounts out of the premium required by insurers. General insurance principles and legal concepts. Transferring risk. Purchasing an insurance policy is a primary method of risk transfer. Fiduciary duties. A fiduciary is a person or entity that manages money or property held in trust for someone else. Examples include trust companies, insurance adjusters, and insurance brokers who handle trust accounts for premiums. Binding authority. A broker's agreement with an insurance company outlines their binding authority, interim oral, written coverage, commission schedules, and the ownership of expirations. Binder claims. If a loss occurs under an oral or written binder before the formal policy is issued, the insurer must honor the claim according to the exact coverage amounts bound. Indemnity, the legal principle ensuring that an insured is compensated for the actual financial loss sustained, restoring them to the same financial position they occupied immediately prior to the loss. Material misrepresentation. If an insured misrepresents a fact material to the risk, the insurer has the legal right to void the contract. However, the insurer cannot retain the entire premium as a penalty. They must return the unearned premium. Legal cancellation by insurer. To legally terminate a policy for non-payment or other underwriting reasons, the insurer must provide a formal written notice of termination. If personally delivered, cancellation takes effect 5 days after delivery, and any unearned return premium must accompany the notice. Cancellation by insured. If the insured requests policy cancellation, it is processed on a short rate basis and takes effect as soon as the request is received. Subrogation, the process by which an insurer, after paying a loss to their insured, steps into the insured's legal shoes to recover the loss amount from the third party responsible for causing the damage. Bankruptcy protection. If an insured person declares bankruptcy and subsequently suffers an insured property loss, the insurer is legally required to pay the claim settlement directly to the designated trustee in bankruptcy. Lloyd's of London. This is not an insurance company. It is an insurance marketplace where independent underwriting syndicates buy, sell, and structure coverage for specialized high-risk objects. Mutual insurance company, a corporation that is owned entirely by its policyholders rather than external shareholders. Property insurance, personal and commercial core clauses, and property calculation. Actual cash value, ACV formulas. ACV equals replacement cost minus depreciation. Alternatively defined as the amount required to replace the damaged property with property of a similar condition, age, and remaining lifespan. Settlement modifiers. The final amount of an insured loss settlement is directly impacted or reduced by the coinsurance clause, deductible clause, and pro rata distribution clause. Deductible definition. The initial amount a client must pay out of pocket for a loss before the insurance company pays the remaining balance of the claim. Replacement cost RC conditions. To qualify for replacement cost settlement, the replacement or repair must be executed with materials of like kind and quality, completed within a reasonable time frame, and constructed on the same site. Commercial coinsurance. In commercial property policies where a coinsurance clause applies, a verified replacement cost or stated value must be established to ensure accurate premium and coverage limits. Pair and set clause protects the insurer from paying for a total loss when only one part of a matching pair or set is damaged. Settlement is based on a reasonable proportion of the total value of the set, but never the value of the entire set. Parts clause. If a property or machine consists of several component parts, the insurer is only liable for the value of the specific damaged part, plus its corresponding installation cost. Mortgager versus mortgagee. Mortgager, the borrower property owner who owes the money. Mortgagee, the financial institution, bank that lends the money. Standard mortgage clause. A separate agreement embedded in property policies designed to protect the rights and financial interests of the mortgagee, bank, ensuring they are paid even if the insured violates policy conditions, e.g., arson. Perils, forms, and endorsements. Perils versus non-perils. Perils are active causes of loss, g. lightning, fire, burglary, windstorm. A utility system or fuel source, such as natural gas heating, is an operating system, not a peril. Robbery versus burglary claims. Robbery requires a threat of force, violence, or coercion against the custodian who has custody charge of the property. Burglary requires visible signs of forced entry or exit to or from the locked insured premises. Proof of loss form. A formal document sent by the insurer to the insured, upon which the insured provides a sworn statement of the estimated value of the damaged property to substantiate their claim. Change of ownership. If a property changes ownership, the broker or insurer must be immediately notified. Failure to notify void coverage, and the insurer will deny subsequent claims. Property and storage. Property placed in a public storage facility is covered for all named perils for only 30 days. After 30 days, coverage is strictly limited to theft, and only if requested and approved in writing. Vacancy permit, required to maintain fire and named perils coverage when a property becomes vacant, meaning the occupants have moved out with no intent to return. Even under a vacancy permit, certain coverages, like vandalism or glass, are suspended after 30 days, but windstorm coverage typically remains active. Seasonal residences. A standard homeowner's comprehensive policy on a primary dwelling will not automatically cover losses occurring at a secondary seasonal residence or to belongings kept there. Separate coverage must be scheduled. Bylaw endorsement. If local municipal zoning bylaws dictate costlier construction upgrades or demolition requirements when rebuilding a damaged structure, a bylaw's endorsement must be added to cover these extra expenses. Earthquake coverage. Earthquake is a standard exclusion under basic property policies. Protection must be added via a specific endorsement for an additional premium. Freezer food endorsement. Covers food spoilage due to an accidental power interruption or temperature change, but strictly excludes spoilage caused by a mechanical breakdown of the freezer unit itself. Detached outbuildings pro rata. If there is more than one detached private structure on the premises, the available policy limit for detached structures is divided in proportion to the value each structure bears to the value of all structures at the time of loss. Theft of building materials. If an insured is renovating a home and leaves raw construction materials, like wood planks, on the driveway overnight, a homeowner's comprehensive policy will pay for the theft of those materials, subject to the deductible